A lot to get to, regarding the reopening, but I'm sure you're aware, market got a bit of a chill yesterday on these reports of ways the president is thinking about trying to punish China, headlines about voiding certain debt obligations. You just want to iron that out?
Yes. As I told Eamon yesterday, full faith and credit of the United States debt obligations is sacrosanct, absolutely sacrosanct. And I might add, the president indicated as much when he was asked about it later in the day. Not only the full faith and credit of our debt obligations and other commitments, but also our intention to keep the dollar as the world's reserve currency. So let me put any of that to rest. China has issues, don't get me wrong, and the president will be dealing with those issues. They have a lot to answer for. The virus originated there, a lack of transparency, all that will be sorted out over time. But regarding Treasury debt and the full faith and credit of the United States, that will not change.
Then what is being considered, Larry, and how do you walk the tightrope given the fact that we're still dependent on them for important things coming down the supply chain like food and drugs and PPE and all sorts of things?
Well, I will just say at this point, we are, as a matter of policy deliberations, we are looking at different options to perhaps bring American companies located in China and perhaps elsewhere around the world back home to the U.S. There are a number of ways to do that. By the way, full cash expensing, 100% cash expensing, which is going to be phasing down in the next year or two for American companies, that has to be bolstered. That's a key pro-growth incentive element. That would apply. We could pay the moving expenses for these companies. There are a number of options we are looking at. So we'll have to, I don't want to get ahead of that curve. But yes, we'd like these supply chains to be based here. I think to some extent, we've seen the importance of that. Now, I don't want to do this overnight, or I don't want to jar markets or anything like that. So we will work through. We will talk to the Chinese. We do have the Phase 1 China deal, by the way. The USTR issued a report, I guess it was yesterday or the day before, that Phase 1 deal with China is moving along, maybe a little slow on the commodity purchases because of the damage to the economy, all our economies from the virus. But it appears, at least at this point, that China is working to implement the trade deal. So we will see. They have a lot to answer for. They're going to be held accountable. But again, full faith and credit of the United States debt obligations will be maintained. That is sacrosanct.
Larry, I hope you'll forgive me if this is a dumb question, but does the president or the administration believe that somehow the Chinese engineered the release of this virus to either derail his reelection or weasel out of Phase 1 or both?
Carl, there are a lot of theories around. There are a lot of discussions around. The president has his views on this. Those views are being developed with the help of our intelligence people and others. So I don't want to go too far down that road. It'll be up to the president to make final decisions here. What we know with certainty, we had the G7 video teleconference meeting. Let's see, it's about 2 weeks ago now. Pretty much all the G7 leaders agreed the virus originated in China, and some of those G7 leaders were particularly vociferous about the lack of Chinese transparency and cooperation in pursuing investigations to get to the bottom of this. So that is an open discussion, an ongoing discussion.
All right, Larry, always great to hear from you. Thank you for coming on the show.
Yeah, thanks.
Just to follow up a little bit on what Carl's talking about, if the president feels that the Chinese acted inappropriately, there are a lot of ways that he could really come after them, retaliate. One would be to raise the tariffs. Now, that was fine when we had unemployment that was incredibly low, but if you have 30 million people unemployed, we know that that harkens back to the Great Depression if you raise tariffs, even if you totally despise the Chinese and think they did a very bad actor. Wouldn't it be better to wait instead of retaliating, say, against them on key technologies or raising tariffs?
Look, as I said before, put it in this framework, an important way to look at it. It seems like years ago, but it was really just a few months ago, we signed a good Phase 1 trade deal with China. And as I said, USTR has put out a report recently which indicates that the Chinese are cooperating and implementing. So that's a very important piece. With respect to future tariff decisions and other measures, that's going to be up to the president. I don't know that there's any rush right now. Our efforts here are to, first of all, continue to get this virus down, open up the economy, get folks back to work. Let's get some economic growth back. There's a lot of pent-up demand. Let's help businesses survive. Let's help payroll workers survive. As you know, things of all those things. That's really subject number one right now, and we are making progress on that. So on the China business, it's up in the air. They are going to be held accountable for it. There's no question about that. How, when, where, and why, I'm going to leave that up to the president this morning.
Okay, let's switch to the economy directly. We know that the activities to keep people in their job are extraordinary. It's really one of the most amazing programs, whether it be PPP or what the Federal Reserve's doing. But there's one element of it that you taught me, Larry, when we were partners, which you have to be careful not to over-incentivize people not to work. We have raised the unemployment benefits to the point where, as a small business person, I cannot compete with the government to keep people. And yet I got PPP for one of my places. I am concerned that the government has made it impossible for me to rehire, given the fact that I can't beat the government. What do you do?
It's an important concern. It's a very good concern. The unemployment plus up, $600 federal plus up, which has created some of these disincentives that you talk about, is something we will be looking at very, very carefully. As you may know, it ends in July. And so a lot of people are concerned about the incentive. Look, we've tried to do this in a way that will create incentives, not destroy them, for both work and business. So we have payroll tax holiday for business. The president, as you know, is very keen on a payroll tax holiday for the workforce. That would gross up their after-tax income by roughly 7.6%. So that would be a good start in that direction. We are also looking internally. And, I'm not authorized to make pronouncements. We're having some very strong discussions with the economics team and the president. But we're looking very carefully at middle-class tax relief, at middle-class regulatory relief, at helping the restaurants and the baseball stadiums and so forth with larger deductions. We're also looking at shielding, liability shields for these small businesses as they open up. As you know, we provided 175 million Americans with assistance, cash, and liquidity to keep them going through this incredibly difficult hardship period until we get to the other side, hopefully in the second half of the year. But we are aware of the disincentive issue. That's why we're looking at a lot of middle-class tax and regulatory relief. And I know there's strong sentiment in some quarters, both here in the White House and on Capitol Hill, to look very carefully at that unemployment plus-up, which created the disincentives. Maybe we needed it. Maybe we needed it at the beginning because you pull out all stops. That's what government has to do with an unbelievable, 100-year crisis kind of thing. But that doesn't mean forever. We want folks to work. I think Americans want to work. Jimmy, you probably saw on the GDP a 13% saving rate in the first quarter. That's a remarkable number. That just shows you there's some pent-up demand out there. The second quarter's going to be worse numbers, no question about it. The hardship issue is going to be even more difficult. It's happening now. But hopefully we can provide growth incentives so when the states reopen, and May is the transition month, May and June probably, when the reopening comes, this economy will be poised to resume the strong growth that President Trump's policies fostered in the first years.
Well, I just applaud everything that's done to be able to keep people to work. It's been monumental. I think it's shocked people, and it's one of the reasons why I believe that the market is up despite what's happening. But let me ask you, Larry, is there a limit to the amount of money that the federal governments, all its different entities, can pump into the economy? Or is it one of those things where you just say the limit is anything that it takes to not have a Great Depression?
Well, look, I think we've all suggested that we will do whatever it takes. Early in this, the president said he will use all the powers of the federal government to provide assistance to help folks and businesses. So there's always that. Now that we're moving forward, again, we are looking at policies that will provide growth incentives, not just more cash and liquidity, but actual growth incentives. You know, we'd like to restart entrepreneurship, for example. We had the animal spirits roaring in recent years. Heck, January and February in Q1 was showing a run rate of 3.1% at an annual rate before the virus came down exponentially in ways that nobody anticipated. So my thought here is you kind of have to do both, Jim. You can't close the door on necessary assistance programs, but by the same token, you have to think through what are the best growth incentive policies for the medium and longer run for the economy. And I'm heartened to some extent. I mean, this is a terrible situation. It's hardship and difficulty everywhere. But look, CBO and a bunch of private surveys and the Wall Street Journal Economist survey, they're looking at almost 20% growth in the second half of 2020 and almost 3% growth in 2021. And I believe after we pause, this is kind of a pause period, when we come back and discuss with Congress, that growth incentives will be crucial to whatever policy actions we take.
Larry, it's David. On that note, I mean, we have many CEOs from some of the largest companies in the country join us and have this week. And many of them are talking about what are fairly significant cuts to their capital expenditures and a phased-in return to work in terms of at least to the workplace for their workers. We can imagine that behavior on the part of the American consumer is not going to change overnight. So I hear you saying you're going to see or hope to see, you're always optimistic, significant growth next year. But how do you really get there, you know, given all the cutting that's taking place right now and the uncertainty that still exists in terms of what behaviors are really going to look like?
Yeah, well, those are important points. Look, we've been meeting with CEOs constantly in every industry in America. We had major retailers in earlier this week. I've sat in on all of these meetings. I've done the conference calls and so forth. So you're right. I think there is a transition. I think, you know, what we hear, companies are anxious to reopen, but they know how important health and safety and security is. So I'll go back to our guidelines put out by the medical team a few weeks ago, where there has to be a 14-day, within 14 days, the downward adjustment in new cases, best practices for cleanliness, of course, maybe taking your temperature or the forehead temperature thing goes fast. These new test kits, David, we do them here at the White House every week. There's swabs in your nose. You get results very, very quickly. I think all these things will come into play. That's what the top business executives want. That's what the top labor unions executives want. We've talked to them as well. So we'll have to work through this. The states will make these decisions. The individual companies will make these decisions. And I just hope they pay a lot of attention to our guidelines, as they say they will. You know, last point, David, on this. One of the characteristics of dealing with a crisis here, you know, that the last time it happened was about 100 years ago, is that President Trump, as a matter of instinct and philosophy, has every step of the way worked with the private sector. There's reason that we have spent so much time, and Vice President Mike Pence as well deserves so much credit. We have spent so much time with the businesses and the unions, for that matter. But I mean, we've relied on the businesses with respect to respirators and ventilators and test kits and therapies now and vaccinations. This is a very strong cooperative effort. It's not just government top-down controls. It's incredibly heavy use of private sector entrepreneurship and, you know, skills and management They're awful smart. They're probably smarter than we are. So that gives me hope that working cooperatively, we can get through this. I believe, David, yes, I am an optimist always. I believe we can get through this. I believe the worst is nearly over. I hope and pray that that is the case. And I think as this infection rate case comes down, it's an omen that America is not far from getting to the other side. Look, let's face it, health and safety is vital, but economic health